if you just do stocks, like I see too many people, there's a good chance that you might lose it all.
Investing can feel intimidating. For many, it's a world dominated by professionals, hedge funds, and algorithms. But Jim Cramer has built a career proving that everyday investors can take control of their financial futures. From running a successful hedge fund, to becoming a household name as host of Mad Money, to writing best-selling books that break down the market.
If you understand the craft of analyzing a stock, you will be able to handle the ups and downs.
Jim has spent decades helping people understand how to invest with confidence. His newest book continues that mission, showing how ordinary investors can build wealth in any kind of market.
I try to detail how we went broke. I was so confident that I was going to make money that even when I lived in my car, I was still confident that I would have more money than my dad.
Welcome to The Bit, where we break down what's happening in the markets and explore the forces changing the economy and finance. I'm Oscar Pulido. Coming up, I'm joined by Jim Cramer, investor, TV host, and author. We'll talk about why he thinks now is the right moment for a new playbook on investing, how retail investors can find opportunities beyond index funds, and what it takes to build a portfolio that works through ups and downs. We'll also hear his lessons from decades on Wall Street and the advice he wants everyday investors to remember when navigating today's markets. Jim, thank you so much for joining us on The Bit.
You know, I'm a huge fan of BlackRock, and I am honored to be here. And I think that Larry Fink is probably the greatest spokesman of this generation. And I say that because I think he's gotten, judging by the assets under management, more people invested than anybody. And that's my goal.
Well, we definitely have, as a firm, a lot in common with what you've written about in your book. This is not the first book you've written. You've been writing about investing for years, but you've released a book titled How to Make Money in Any Market. And I'm wondering what makes this moment in the market different or especially important for everyday investors that motivated you to write this book?
Sure. I think that I wrote it in part. I know, and I'm not trying to be because I'm here, because I've said it to many other people. Larry wrote a letter not that long ago where he talked about how kids think that they won't make more money than their parents. And I was horrified because I realized that is the case, whereas both Larry and I felt that we could. And I wanted to talk about how I got into investing and how, frankly, through compounding, through investing regularly, through owning a mutual fund or a S&P 500, and then also some individual stocks, I think that you could make a difference in your life. And I want people to realize they have to do this, or else they're going to die at their desk because you won't have enough money to retire. And I also think that you have to trust the market, because when I got in the market, the Dow was at 1,000. We know it's 47,000. And I think it's worth remembering, while history may not repeat itself, something that has that kind of run is something you want to buy when it goes down, not sell. So there's a lot in the book that's just about the core notion that you must save. And here's a variety of ways. I tried to make it interesting because saving tends to be boring. And something I'm good at, I think, is making a boring topic come alive.
And you talk about the stock market and compounding, and that does rhyme with what Larry Fink has talked about, which is the power of capital markets and that ability to bring savers and investors together and benefit from the innovation that goes on in the economy.
Well, I would say that two of my idols are Larry and Ken Langone. And it's interesting that they both had that in common. Someone was asking me the other day what I thought about socialism. I said, that's a failed way that makes it so in the end you're for redistribution. And what I'm for is cheers for capitalism because it has worked. And those who are against it, I think, are not students of history.
When you think about the book and the person reading it, if you had to boil it down, what's that overarching message you want people to take away? And those people being the everyday investor.
They always ask me that. And I really hope that people do, because when I did the synopsis of why I wanted to write the book, I said, look, it's not as hard as you think. It's much easier than when I first got involved, when you had to go to the commercial library and all the data, everything was old and you had microfiche and old research. It's much different now. You've got, if you want to learn the facts, they're right at your fingertips with the ChatGPT. If you want to be able to observe something and have curiosity, you can have that answered. If you're worried that the balance sheet's bad, I show you that. And the ultimate conclusion is that it's time. You can save. If you want to save with stocks, and I know you do if you watch Mad Money, this is how you do it. And I always felt that at some point I should say, here's the homework, because I obviously do the homework. If you can't do the homework, then you should go 100% index. You should just give it to BlackRock, like a lot of other people, and be able to say, look, I can't. I don't have the time. But if you do, and you have the inclination, this is what you do. And I think that's really important because we got to remember there are people who want to do individual stocks. We don't want to discourage investment. We do want to encourage buying and holding, provided the fundamentals are still good.
You mentioned microfiche. I'm sure I know what that means, and I'm sure there's
people don't.
Some folks don't even know what that is. People are looking that up right now, by the way. But in the book, you talk about how there's a lot of information and tools that help distill that information, so maybe you can make more educated decisions. But you're actually not the first author that we've talked to on The Bid. In the past, we've talked to a gentleman named Darius Farrow. Now, Darius talks about how he applies stoicism to investing and that need to be calm and long-term in your thinking, and that helps you withstand volatility. I'm wondering, when you hear that, how do you describe your own investment ethos when you have a market that doesn't always go up? It can go down as well.
Right. Well, I'm from the pyramid style of investing, which is that I think that your first move is probably going to be wrong. So what you do is something that Michael Steinhardt taught me many, many years ago, great hedge fund manager, which is you build a position over time. Don't do it all at once. Try to get a better basis. Remove the emotion by just accepting the fact that your first buy will be wrong and build up as it goes down, provided that you've done the homework. That is your protection. It's even your protection in a bad market, because if you buy growth stocks, which is what this book recommends, you're going to be able to triumph over the market. If you do buy cyclicals, I'm not for you. I actually literally say these aren't for me. But growth stocks have a habit of coming back. I used to hate the growth stocks because when I started as a manager, I wanted to be able to find these really cool things, these situations where something big could change. I want classic growth. I like simple situations where you can, like my mom in the book, go see, you like, check out whether it matters. And I do talk about how she didn't know how to check out. She liked a chain giant, and it was frankly not good. She went to the store and she liked her store. And that would have been great had she done the homework, but she didn't know what that is. So I talk about what my mom should have done. My father bought hot tip stocks. He lost almost all of our savings on a company called National Video. It would have been great had he done some homework. So I try to detail how we went broke. I was so confident that I was going to make money that even when I lived in my car, I was still confident that I would have more money than my dad.
You talk about doing the homework, which is an important theme in your book, which is you have to do the research. And you mention how if people are just paying attention to the world around them, it's right in front of them. But maybe talk a little bit about what does that really mean in people's daily lives?
Well, sure. When I came up with FAANG, and that was just something that was just a device to try to get people to know things, like when I named my dog Nvidia. FAANG was Facebook, Amazon, Netflix, and Google. Now, how did I know those? Because those were things that my kids were on too much. My daughter also was a suicide counselor, and she said that it's impossible to beat Facebook and what it's done to young people. I put Amazon in and Apple in, but Amazon, I tried to get the bills down. I couldn't get the bills down. Netflix was what they were doing when I wanted them to be with me, and Google was banned in school. So you're talking about things that are right in your those are purloined letters. And I chose those because if you didn't realize that they were doing well, or if you decided, I really think they're good, but I can only own an index fund because Warren Buffett said it, then I'm not for you. I'm for looking at things, making a judgment. I'll give you a good example. I was talking to my partner, Jeff Marks, today for our club, investing club, and I said, CVS is at 85. We all knew that they were the survivor, right? They went out of business. Walgreens was closing left and right. The guy who just took over was very good. Aetna had a good star rating. How could we not have gone and bought CVS because we're there every day? And the answer is because we observed, but we weren't curious about how that was happening. And so I find every day you can get ideas everywhere, but then you have to research them. There are two parts of the book that I wanted to leave out, but I couldn't. One was the actual how to read a balance sheet and how to read an income statement. I took a huge amount of time on that. And I was afraid that the readers wouldn't do it, but I didn't care. You had to have it. And then they wanted stocks. And I didn't want to give anybody stocks because the whole goal of the book is for you to learn how to do stocks. So I gave stocks of what I thought would be the next FAANGs. But I know that what I really wanted to do was demonstrate that great wealth could be created if you pick a stock and invest, provided you do it alongside of an index fund. Because if you just do stocks, like I see too many people, there's a good chance that you might.
If you're enjoying this episode of The Bid, help us spread the word. Share it on social media and tag us. We love seeing your takeaways and hearing what resonated with you. It's one of the best ways to help new listeners discover the show. Thanks for being part of the conversation. And now, let's go back to the episode.
You might lose it all.
And you do give people some guidance, not just on how to read a balance sheet and income statement, but you do give some actual examples of stocks that you like. And
yes,
I think you said your dog's name's Nvidia, so people maybe are going to pay attention to your pet's name as another tip.
That was Jensen Huang, the great CEO of Nvidia. He had me out to show me the future because he said no one was paying any attention. And at one point, we were walking through this hall where there were mechanical dogs picking up Jell-O cubes, and he was rewarding the ones that got the Jell-O cubes because it was hard to do. And then he asked me to tell a machine to paint something, and he said, name a famous artist. I said, Cezanne, do a seascape, because Cezanne was really for still lifes. And it came out remarkable. And then he showed me a car that was trying to simulate black ice, and how he'd run it 2 million times. He wasn't there yet. And then he asked me to identify which of the stormtroopers from Star Wars were the real ones and which were the ones he created via tokens. Then he showed me a box that could do 27 languages. And he said, don't you think this would be great for like a Wendy's or McDonald's? And he said, why isn't anyone paying any attention to what I'm doing? And so I said, I got an idea. Don't worry about it. I got your back. And when I got back, I said, look, I have a dog whose name is Everest. And as of today, I'm renaming it Nvidia. You don't name a dog a stock unless you really believe. And we had a really nice gathering at CNBC 2 weeks ago where we had all the people who had made millions of dollars listening to that with Jensen, because Jensen wanted to meet millionaires that he had created. And when I got there, it was kind of embarrassing. He said, Jim really created them. But mine was artifice. Mine was entertainment. Jensen was the real deal.
Your curiosity has definitely been one of your advantages over time.
But
and
it's
I think
childlike. Oscar, it's childlike.
But that curiosity is something that I think you're trying to encourage people to be curious. And then maybe that's how they uncover the opportunities.
Yeah.
Maybe we could take a step back. You've mentioned Larry Fink, somebody that you admire.
Oh my God, yes.
One of the things that Larry's been talking about is a retirement crisis in the U.S., but really globally, and people needing to think more long-term. In the U.S., we have a lot of people who use 401ks, for example. And one of the innovations in the 401k space have been things like target date funds. And so how do you think about something like that, which is set it and forget it, and for younger investors puts them more in the stock market at an early age? I think that sort of rhymes with maybe some of the themes you talk about.
Yeah. What I wanted to do was to make it really simple, which is that I want you to save. And I don't really say, listen, it has to be an S&P 500 index fund. I want you to put money away, and therefore I'm all aboard Target. If I don't like target funds, then what I'm saying is, you know what? There are superior and inferior ways to save. I am about saving. And what I tried to do was say, listen, I know many of you like stocks. Okay, that's a presumption. I'm not going to tell you to not own stocks. I will tell you how I have found to be able to analyze a stock. Because one of the things that I want, now this is something that Larry and I have not talked about. I need to get people interested. Okay, I don't want to say excited because the stoic, I like that. But I need people to get interested, and they're more likely to get interested in an index fund if they're at least brought in by Nvidia, if they're brought in by Facebook, now Meta. I need to get them in. I'm not going to recommend the speculative nonsense that's going down, but I want people to be able to say, you know what? Johnson & Johnson, I think the pharmaceuticals are interesting. Wait a second. Maybe I need to analyze all the pharmaceuticals. Oh, I don't really have time with that. How about a vertical about pharma? Perfect. See, I would like you to think that you can pick the best, but not everybody can. And I never want to presume that people can do that. I insist, like Larry, that no matter what, they have to invest. They'll never be able to retire. Is it target date? Is it infrastructure funds? Is it some of the more active ETFs? I really don't care. I just need you in, because you've got to save.
You want to get people more interested in capital markets.
Yes.
You want to demystify a little bit of what it is to invest in the market. And therefore, once you get somebody in and interested, presumably they stay for a longer period of time, and that maybe starts to close a little bit of this gap of
Totally.
retirement crisis that we have.
Well, and remember what Larry writes that I think is very significant is people have no hope. And he writes that, and look, I think some of that people will interpret me as being political, and I'm not political. What I'm saying is empirically, there's reason for hope because of what's happened over time. But I think that Larry and I would very much agree that the no hope equation has to be busted. And those who have it are shorting themselves. What happens if they have long lives? They are really out of luck. So we have to dispel the notion that there's no hope. And we can do that by demonstrating that my father's friend, who just put a little money away in Merck every single month and became a millionaire, and I met him. It wasn't from his job, but he had hope. He came back from the war. He was a Marine colonel, and he was filled with hope. I can't get people to be filled with hope because things are just so chaotic, but I can get people to feel like there's hope if you know that there's a Tim Cook, or that there's a Jensen Huang, that there's a Larry Fink, that there's a Ted Pick. And these people, and I can name many of them, are really worth investing with. And one of the things that I was first marveling about was like, why does Merck let you make money? You don't work at Merck. Why do they even share the profits? And the answer is they're public companies. If you just go buy the stock, then you're my mom. Okay. And my mom was a failed investor. What you do is you take that and then you say, okay, I'm going to do ChatGPT. Give me the balance sheet. I want to see the income statement. It's a great starting point, but you have to recognize if you think that's the end point, I'm not going to be able to help you.
Right. A great company or a familiar company to you may not be a great investment.
Right.
You have to do the homework. You've had a long career, a very successful career, and you started by saying the stock market over time it compounds, it's a wealth builder. Right. But what are some of the hard lessons that you've learned that you wish you had known maybe earlier?
Sure. I mean, there's stocks. First of all, I had a stock called Memorex Telex. It was $2 stock and it had come out of bankruptcy. I thought it had a better balance sheet. And I kept buying it because I said to myself, all you can lose is $2. And I ended up having a 5% position in it. And I lost the $2. And believe me, when you have a lot of a $2 stock, it's a big, bad hit. So I don't think that people should speculate on something that is not working, that is bad. That company ended up having to take a lot of debt. I mention that because there's a lot of people who buy $2 stocks and $4 stocks, making a big mistake. Own a good company. Don't worry about the price of a stock. I also think I made some couple mistakes that I talk about in the book. I lost faith. Losing faith in something you've done a lot of work in is something that I've made that mistake, and I'm trying to get others not to do it.
Jim, you have a lot of confidence. Nobody's ever accused you of being short on confidence. What you're saying is you still do the homework. So for somebody who maybe is still lacking some of that confidence or approaching investing in the stock market brand new, how do you counsel them of how to deal with the ups and downs? What would be that word?
So we have to go away from the firmament to be able to counsel. One of my investors in my hedge fund was the great legendary actor Gene Hackman. And he came in, he was in my lobby, and I said, what are you doing? And I had no idea it was him. He wore a cap and he goes, I'd like to be in your fund. And I said, okay, sure. I didn't want to, he goes, and he takes his hat off. It's like Gene Hackman. So, Gene Hackman. But Gene told me, he said, anytime you get down, anytime you have to deal with the highs and lows of a situation, reflect on the craft and understand the craft. You know how to do the craft. The craft is your friend. You would use that word over and over again. So I sense, look, when I have doing Netflix, the craft says you read the conference call, you read the analyst notes, you put what you remember about Ted Sarandos or any of the important people and what they've been saying. So it was Gino who got me interested in the idea that if you understand the craft of analyzing a stock, you will be able to handle the ups and downs.
And that craft is something that I think you're trying to communicate in your book, which is how to go about perfecting that craft or at least starting to master it.
I think that Gene, I remember you would ask him about things and he did so many good things. And he would talk about how he was the only actor who had studied the lines and other people, and I won't reveal, but other people didn't know the lines, including people who are right now very big in the movies. And he said, they don't know the craft. The craft is that you have to memorize and know. And so when the director says, I want you to take it this way, you don't complain. You say, okay, I've done it that way myself. That's the craft. And that's how I feel about the give and take in the morning show and the give and take in stocks. You know the craft, you can do it.
Jim, it would be remiss of us to not do a lightning round here at the end.
Oh, this can't be the end. Come on, man.
Well, to try and get to know you a little bit more personally, I think you've shared with us some great insight on your belief in the stock market and the importance of long-term investing. But we want to get to know you a little bit more. Who is Jim Cramer when he leaves the office? So what's your favorite vacation spot?
My favorite vacation spot is a place called Clayoquot, which is in the British Columbia. You take a seaplane there. It's impossible to get to. It's glamping. And you hike crazy place, you fish crazy ways, you see nature crazy ways, you can bird. It's the calmest place I've ever been.
It sounds like a nice remote option. I know you're up early, so...
Oh, yeah, ridiculous.
And you work in New York City, so what's your favorite bagel order?
Oh, you know what? Russ and Daughters is next to here. And I'm like, oh God, I can't go to Russ and Daughters. It's going to be way, way too fattening for me. But I would take a bagel from there. I am a Philadelphian. We like egg bagels, and I can't get an egg bagel here. It just drives me crazy. And I'm like an everything bagel with cream cheese. There's a good place called Lassen and Hennings in Brooklyn Heights that has a really good veggie cream cheese.
All right, good. You have recommendations as well. What's your favorite thing to do when you're off the air?
All right, look, if it's the summer, I like to garden. And when I garden, that means I just like to weed. I like to listen to some good music and just weed, or listen to the bees and weed, because I have a drug that combats tinnitus, but I have bad tinnitus. And I love to be able to hear the quiet now that I've been able to tame the disease. But to garden is really fantastic. In the winter, all right, this is something pretty silly, but I think I'm childlike. I have a place that I can't reveal where, because a lot of it was because of security. The police in Summit said, look, Jim, could you find a place that is not on the grid? So I did that. And it has a stream, and the stream is clogged. So my daughters and I, we have a thing we call Project Momentum. And we have upper momentum, we have central momentum, and we have lower momentum. And we just constantly clean it. And because I believe that fish would appear. And they did, as if by magic. So now we have fish in the stream. But you have to constantly keep it up. Project Momentum never ends. I know it's silly.
That's all right. You have some interesting areas of the world that it sounds like you're getting to.
Idiosyncratic is what my late father would say. Idiosyncratic, Jimmy.
Well, thank you for many years you have championed investing in the market, thinking long-term. You've written about that in your book.
Can I just say one thing? I don't like trading. So if you're a trader, I'm not going to help you.
Right. It's about long-term investing. Jim, thank you so much for joining us on The Bid.
Thank you, Oscar. This is really terrific.
Thanks for listening to this episode of The Bid. Next up on The Bid, we take a look at private markets and how they're expected to grow exponentially in the next 5 years. Subscribe to The Bid wherever you get your podcasts.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.